Good day, everyone. In behalf of DIFC Academy and DIFC Authority, I would like to welcome you to today's outreach session on UAE Economic Substance Regulations by Tanuja Paramasivam, Senior Vice President Legal of DIFC Authority. As attendee, you can listen only. Your mic can't be unmuted. You'll have the opportunity to submit text questions to the presenter by typing your questions into the chat box of your control panel on the right side of your screen. We will be sharing with you today's presentation slides after the webinar. If you experience any technical issues, please check your internet connections and refresh your browsers. And now I'll hand you over to Tanuja.
Thank you, Maristella. Good morning, everyone. I'm Tanuja Paramasivam, and I'm Senior Vice President of Legal at the DIFC Authority. Many of you know me, and I also work very closely with the Registrar of Companies. So today we're covering a very hot topic, which is about economic substance. And it's a very timely topic because we have a deadline of 31 December, which may be applicable to a lot of you. So it's very important that we understand some recent changes that have been made to the legislation and what your obligations are in order to meet these deadlines and avoid any penalties. So this presentation will cover a number of things. It will give you a background on economic substance regulations, tell you about who is subject to the regulations, as well as explain some of the new exemptions that have been introduced under recent amendments to the economic substance regulations as well. We'll give you an overview of some of the key changes that have been made and what this means for you, along with what you will be required to do, particularly depending on your reportable period, to see whether the 31 December deadline is applicable to you. We'll also go over some consequences of non-compliance. We'll leave the question and answer session to the end. And because we don't have much time, I'm planning to jump right in. Okay. So just by way of a background and introduction, everyone knows about economic substance. It's been a hot topic now since 2019 in the UAE. The reason this legislation was introduced, it was introduced by the OECD or in response to OECD and European Union initiatives in relation to tax avoidance, basically, or harmful tax practices. It only applies to jurisdictions that have low tax or no tax jurisdictions, and one of those is the UAE. Now, as a result of these global initiatives, on the 30th of April 2019, the UAE enacted the first economic substance regulations. And then they later issued guidance in around September 2019, and there are links to those in the presentation. I'll also let you know upfront that the presentation will be mailed to you, so you will have this as guidance and as reference, but please feel free to type in your questions as well. Okay. Now, that's what happened in April 2019. There was a lot of buzz in 2019 about economic substance regulations and what that would mean. As you know, they apply across the whole of the UAE, not just in any one free zone and not just in DIFC. They are federal legislation that applies throughout the UAE, regardless of whether you're registered with DED, DIFC, DMCC, JAFSA, wherever you are, Abu Dhabi, Ras Al Khaimah, it's all the same. It's the same legislation. It applies in the same way everywhere. Now, recently as a few months ago, in consultation with the OECD and the EU, the UAE made amendments to the 2019 legislation and enacted new economic substance regulations, which repealed and replaced the previous ones. They also issued new guidance and a new relevant activities guide. Okay, the relevant activities guide is very, very important to figure out whether you conduct a relevant activity or not. You can find it within the guidance under Ministerial Directive 100 of 2020. All of these were issued in August. All right. Now, the requirement is that only those firms that conduct one of the 9 relevant activities are required to submit a notification and a return. Now, with this, most of you have already submitted a notification to the DIFC Registrar of Companies in the middle of the year. So the deadline for that was around 30 June 2020. You are now required to resubmit a notification on the Ministry of Finance portal, which will be live soon. The expected date that it is meant to go live is the first week of December. Now, if you have a relevant reportable period, you are expected to resubmit your notification on the MOF portal by 31 December, and if applicable, also file your economic substance report on the MOF portal by the 31 December deadline. Okay, we'll take you through who needs to file when, but this is the high level thing that you need to note and take away. Again, the deadline is 31 December, depending on your reportable period. And the Ministry of Finance has issued a notification in relation to these deadlines, which you will find on the MOF portal. And it's available on both the MOF website as well as on our website as well. And we have given you a link to it on this page. Okay, so in a snapshot, everything I've told you so far is in this one slide. So although the economic substance regulations were first introduced on 30 April 2019, they were effective from 1 Jan 2019. They apply to any financial year commencing on or after 1 January 2019. We will take you through some examples later, but so if you have a 30 June financial year, then your relevant financial year will be the one commencing in 2019. So starting on 1 July 2019 and ending on 30 June 2020. The previous financial year that commenced in 2018 and ended in 2019 would not be applicable because the economic substance regulations only applies to financial years commencing on or after 1st January. That's a very important thing to know. Now, most of you filed economic substance notifications with us on 30 June 2020. Now, as a result of the amended economic substance regulations that were introduced on the 10th of August 2020, you are required to file a further notification on the MOF portal by 31 December 2020 and possibly also a report depending on your reportable period, and we'll go through that now. Okay. But first, we'll talk to you about who is actually subject to the regulations. Now, on the left-hand side, you'll see these colorful boxes. Those are the 9 relevant activities. I think most of you know what this is now because we've been talking about it for a long time. A breakdown of all these relevant activities is in the relevant activities guide. Please refer to the guidance to figure out whether you fall within these relevant activities. We as the DIFC authority cannot, or the registrar of companies, cannot tell you whether your business falls within one of these relevant activities. That is for you to determine for yourself. Please read the relevant activities guide because it gives you a very good example, an idea of whether your business falls within it or not. It also gives you examples of other firms and when it applies and when it doesn't apply. So please review it. It provides a lot of guidance. If you're still unsure, please go and get independent advice because we cannot tell you if you conduct a relevant activity or not. Now, the economic substance regulations apply to all entities that conduct one or more relevant activities. As you know, the Registrar of Companies required all entities to file a notification with the registrar. That is not the case going forward with the MOF portal. On the Ministry of Finance portal, only those that conduct a relevant activity need to file. If you don't conduct a relevant activity, you do not need to file anything at all. Okay, so it's very important based on your business to figure out whether you conduct a relevant activity or not. That's always the first step. As you know, the regulations apply to financial years commencing on or after 1 January 2019, and they do not apply to exempted licensees. this is a new definition. I will take you through what that means. However, even if you are an exempted licensee, you are still required to file a notification to be able to avail of that exemption. If you don't file a notification on the MOF portal, then you are not entitled to that exemption and you would be still considered to be subject to the regulations. In the DIFC, the economic substance regulations apply to all company types, regardless of whether you're a private company, a public company, a partnership, a foundation, an MPIO, or a branch. Now, I know the Ministry of Finance has issued guidance saying that it doesn't apply to foundations and possibly also to MPIOs. DIFC foundations are legal entities, as are NPIOs. So technically, they would fall within the definition of a licensee. However, because their activities are so limited, it is quite likely that none of the relevant activities will apply to them. But once again, please make that determination for yourself. If there are more questions, we can take those to MOF specifically, and we will also try and get clarification around the status of foundations and MPIOs, so DIFC foundations and MPIOs as well. Now, we've talked about who's in scope, so let's talk about who's out of scope. The new economic substance regulations, which were introduced in August, have introduced new exemptions. So under these exemptions, there are a number of exempted licensees. If you are an investment fund, this is only the investment fund vehicle and any vehicles that are used to make investments of that investment fund. But really, it's just the investment fund vehicle, not the investment fund manager, but the fund vehicle itself that is considered to be an exempted licensee under the new regulations. In addition, any entities that are tax resident outside the UAE and subject to corporate tax outside the UAE are also considered to be exempt. Entities that are wholly owned by UAE residents, so those are UAE residents like you or I, or UAE nationals, and where that entity is not part of a multinational group and only carries out its business in the UAE. So this exemption is aimed at exempting entities that are wholly owned by UAE nationals or UAE residents that only operate in the UAE, so don't have branches or offices in other countries. They may have clients in other countries, but they shouldn't have operations outside the UAE because, again, this legislation is aimed at stamping out tax avoidance in other jurisdictions. So if your operations are only within the UAE under this definition and it's wholly owned by UAE residents, then it would be exempt. Another big exemption that has been introduced are UAE branches of a foreign entity that's subject to corporate tax outside the UAE is also considered to be an exempted licensee. Now, if you're claiming any of these exemptions, you will need to submit evidence of these exemptions in your notification. So examples of this is a corporate tax certificate, a corporate tax assessment, or evidence of payment of corporate tax. Now, we have had questions in the past about what happens if you are actually subject to tax in another jurisdiction, but due to double tax treaties or other things like that, no tax is actually payable. So the guidance that the Ministry of Finance has issued, you'll find this on their own guidance, that Ministerial Decision 100 of 2020, states that you just need to be subject to tax, not taking into account any double taxation treaties or anything like that. So if the income of the DIFC branch or DIFC firm is subject to corporate tax in another jurisdiction, if there were no double taxation treaties or other things in effect, then they can avail of this exemption. As I've said before, in order to actually be able to benefit from these exemptions, you do have to file a notification. You need to provide documentation in that notification to evidence your status as an exempted licensee. This will be assessed by the Registrar of Companies to see whether you meet these criteria or not. Another really important thing to note is that under the original economic substance regulations, the only exemption that was available was for entities that were 51% or more owned by UAE government. That exemption has been removed. So government entities and government related entities are no longer exempt. If they conduct a relevant activity, they are required to file notifications and returns. Okay. If you are an exempted licensee, then as I've said a number of times, you are required to submit an economic substance notification, but you are not required to submit a report or meet the economic substance test. But in order to benefit from the exemption, you have to lodge a notification and you have to provide evidence to justify that you fit within one of these categories. Okay, we'll keep moving on. All right. Let's talk about some of the key changes that were made as a result of these of the amendments to the legislation. So, as I've told you at the beginning of our session, in August, the UAE enacted new economic substance regulations, which repealed and replaced the 2019 legislation. And they issued new guidance. Within that guidance, you will find in Schedule 1 the relevant activities guide. I cannot stress how important that is for you to figure out whether you conduct a relevant activity or not. Okay. Now, as a result of these new legislation, the definition of licensee and exempted licensee has been changed. We've talked about that definition. Um, there is also clarification about branches, which I will take you through in a minute. And there have been some changes to some of the relevant activities in terms of distribution and service center business and high risk IP business in particular, which I will be taking you through as well. They have also clarified the filing timelines for notifications and reports. The normal rule is that you have to file your economic substance notification on the MOF portal within 6 months of the end of your financial year. And you need to file reports within 12 months of the end of the financial year. Now, that's the normal rule. However, as the MOF portal has taken some time to come into effect, we're expecting it to go live on the 1st of December. On the first week of December. What they have done is they've given a grace period for any of those reports and notifications that would normally have had to have been filed prior to the portal going live. So the deadline for any submission that was meant to be made by 31 December is 31 December. So you have a grace period until then. You have 1 month from the time the portal goes live to file your submissions. We're going to give you some examples of the actual timeframes and when you would need to file depending on what your reportable period is. So wait for that, and then if you still have questions, please ask them. There has been a change to the definition of relevant income, and they have also clarified the roles and responsibilities of key authorities involved in economic substance in the UAE. So the UAE Federal Tax Authority was appointed as the national assessing authority. It will make assessments on economic substance on behalf of the entire UAE. The role of regulatory authorities like the DIFC, Registrar of Companies, has also been clarified, and Ministry of Finance as the competent authority has also been clarified in the regulations. They've also talked about how the legislation would be administered and how information will flow between the various authorities. So we have a little diagram to show you how that works later on, but first I'm going to talk to you about branches. Okay, let's go. So first of all, we've already talked about branches being an exemption. So if you are a UAE branch of a UAE business, you're not actually exempt, but what you need to do is you file one single notification in the main jurisdiction that that branch is registered, or sorry, the entity is registered, and they will report on all the activities of all the branches. Okay, so I'll give you an example. If you have a DD registered entity and it has branches, and that's the main entity, it has branches in DIFCs in DIFC, in DMCC, in JAVSA, in DAFSA, all over the place. It could be, for example, Costa Coffee, maybe even. They have a number of branches just within the DIFC. But if it's a UAE branch of a UAE business, that's important that it's a UAE business, then if the main entity is in, say, DED, then that DED entity will file one notification on behalf of itself and all the branches in the UAE. Okay, just in that through DED being its main jurisdiction. There will be no need for that entity to file in DIFC for its DIFC branches, for its DMCC branches, for its JAFSA branches, and its DAFSA branches. Just the main entity needs to file on behalf of itself and all of its branches. Now, if on the other hand, remember there is an exemption for a UAE branch of a foreign business. So if it's a business that is registered, say, in Hong Kong, and they have a branch in the DIFC, then they are not that branch in the DIFC is not subject to the economic substance regulations as long as that branch is subject to corporate tax in Hong Kong. It's subject to corporate tax in so the main entity in Hong Kong would normally pay tax on the income earned by the DIFC entity. If there are double taxation treaties which bring that down to zero, to corporate tax in that main jurisdiction, then it would be considered an exempted licensee. They will still need to file a notification, but they're not required to submit a return. Then we have another scenario where we have foreign branches of a UAE business. So say you have a DIFC incorporated firm, it's a private company that has branches in Saudi and Kuwait or wherever it is, it doesn't matter. Now, if the branches in Saudi and Kuwait are subject to corporate tax outside the UAE, you are not required to report on those branches in the UAE. If they're not subject to corporate tax on the income they earn outside the UAE, then the main entity in the UAE will need to report income of those branches on its returns as well. Now, we have in the past received a number of questions about rep offices and how they will be treated. Now, rep offices by definition is a branch, so they fall whichever category they fall under within this slide, that is how they will be treated. So if the rep office is a branch of a foreign entity, then as long as it's subject to corporate tax outside the UAE, then it can avail of the exemption and it will only need to file a notification. Okay. There have also been changes to relevant activities, as I mentioned before. We'll cover the distribution and service center business and the high risk IP business. So, the distribution and service center business actually relates to two different relevant activities. One is the distribution business. This requires all of the following conditions to be met. One, that the entity purchases raw materials or finished products from a foreign connected person, so another member of its group that's located outside the UAE, and resells or distributes that raw material or products, whether it's in the UAE or outside the UAE, it doesn't matter. Okay, so two components. One, that you purchase raw materials or finished products from a member of the group that's located outside the UAE, and then you resell or distribute it anywhere. Okay, now where you are purchasing or distributing goods to third parties only, you are not engaged in distribution business. So if you're purchasing these goods from a third party and then distributing them, then you are exempt. It's only when you're purchasing the material from a foreign group company and then reselling it or distributing it that you are caught by this definition. Now, in addition to that, I'll take you through an example so you understand how it works. You're not required to prove, you're also not considered to be a distribution business if you engage in one-off transactions and it's not in your ordinary course of business and you you charge for it on a cost or less than cost basis. So that's that second asterisk there. If it's a one-off transaction that's not in your normal business, you're not really a distribution business, you've done a one-off transaction on behalf of one of your group entities, then you could potentially fall under that category and not be considered to be doing a distribution and service center business. One of the changes that has been made in these amendments is that goods no longer need to be imported or stored in the UAE. Okay, now let's take an example. We have a furniture distribution company with a headquarter in Lebanon and a branch in the DIFC. Now, this entity, the DIFC entity, buys furniture from the group entity in Lebanon, and then it sells it to customers in the UAE as well as to a group entity in Saudi. This sort of an entity is considered to be a distribution business. It totally meets the definition of distribution business. It's even called furniture distributors. That's what they do. Even if they only imported or if they only bought the products from their group entity in Lebanon and sold it to UAE customers, they would be considered a distributor and subject to this relevant activity. Or if they purchased it again from the group entity in Lebanon and resold it only to its KSA entity, then it would still be considered distribution. It doesn't matter where it distributes it to, as long as it gets it from a group entity and resells or redistributes either raw or finished products in the UAE outside, you're caught. Let's talk about the other side of this this activity is the service center business. It's very important to note that it's a very wide scope for this activity. It includes consulting, administrative, and other services. It requires services to be provided to a foreign connected person. And you should note that the previous requirement for it to be a business outside the UAE has also been removed. I think this is where the client is outside the UAE. Now, licensees engage in the service center business if they provide consulting, administrative, or other services to a foreign group company in its ordinary course of business. So, if it is not in its ordinary course of business, then it would not be considered part of this relevant activity. If a licensee is only providing services to third parties directly and it's not considered to be engaged in service center business, and any one-off transactions that are charged at cost or less is also excluded. So let's go through an example. I've got two examples here, okay, to make it a little bit clearer. We have ABC Group Limited, which is a US company headquartered in the US with a subsidiary in the DIFC, which provides it's a HR service company. And this entity provides HR support services at cost to a group entity in Kuwait. In this case, it would be considered to be a service center business because it is in the ordinary course of HR UAE's business to provide HR support. And it is providing that HR support to another group entity and it's charging them for that service at cost. Okay, it's within this definition of service center business. Now, another example is where we have say an audit firm that's headquartered in the UK and has a DIFC subsidiary. Now, in this case, ABC Audit Ltd in the DIFC provides temporary IT support to ABC Audit in Saudi. Now, you know that the business of this group of entity is audit services. What they are providing, the DIFC entity is providing to the Kuwait group entity is temporary IT support. It's not in its ordinary course of business and it's only on a temporary basis. This would be considered a one-off exemption and not part of the normal business of this group, and would therefore benefit from the exemption, and it would not be considered a service center business. However, I'm also going to take you through one other example which is very prevalent in the DIFC in particular. We have a lot of these service type businesses, whether they're law firms or accounting firms. I usually pick on the law firms, but I'm going to give you an example. It's exactly the same example of one of the big um, accounting firms. So think of any of the big accounting firms, and if one of them, their DIFC branch or DIFC subsidiary, is working, the accountants in that office, the DIFC office, is working with their UK office. Let's talk about this ABC kind of audit example here, but it's a different scenario where the DIFC branch is supporting its UK entity in its services to a client. So the team that the UK entity is using is made up of auditors within the UK as well as auditors in the DIFC office. And the UK entity has got the contract and it's servicing a client wherever they may be, it doesn't matter. Once the services are provided, the UK entity pays some fees to the DIFC entity for the work of the auditors in the DIFC firm. This would be considered a service center business. So please consider that. Now, whether it's an audit firm, a corporate services provider, a law firm, whatever the service is, if you're providing consulting, administrative, or other services, you may be caught under this definition where those services are provided through a foreign group company to clients of that foreign group company. Okay. So that's what this is. If you have any questions, please type them out in the chat box and I'll get to them at the end of the presentation, but we'll keep moving because there's a lot to cover. All right. Another key definition is in terms of high risk IP business. This is another relevant activity. It falls under the IP business activity. But as you know, there are increased substance requirements for high risk IP businesses, and they're deemed to fail the economic substance test unless they can show evidence that they have enough substance in the UAE. Okay. So the high risk IP business, the definition has been tweaked a little, not a lot, but it requires all the following three conditions to be met. First of all, the entity must not have created the IP asset itself, which it holds for its business. It must have acquired that asset from a connected person, so a group entity, whether it's based in the UAE or outside the UAE, or it purchased the IP asset from someone who was doing R&D on it, who did the research and development and developed it, that was outside the UAE, and the DIFC entity paid money to this person, whether it's an entity or an individual scientist or technician or IT guru, whoever it is, it doesn't matter. If they paid for someone else to develop an app or a program or a vaccine or whatever it is for them, and they're located outside the UAE, and they license that IP asset to another group entity or earn separately identifiable income from a foreign group entity in relation to the use or exploitation of that IP asset. Okay, three components. Each one is a little bit detailed, but it comes down to if the UAE or DIFC entity didn't create the IP asset itself. Let's talk about a tech company. We have quite a few of them here in the DIFC. We have FinTech Hive. If one of our FinTech firms was to hold IP that it did not create. It acquired that IP from another group entity, whether it was in the UAE or outside the UAE, or it funded a IT guru in Silicon Valley or in India or wherever they may be to develop an app or some sort of IP for them, and in return they paid money for it, and they license or sell it to another group entity, either in the UAE or outside the UAE, and they earned income from that, then they are subject to this. That's basically what this means. And we'll take you through an example which outlines it in a little bit more detail. Okay, so in this example, it's a pharma R&D company headquartered in the UK. The DIFC entity is a holding company which owns the patent rights to this. So let's say it's the vaccine for COVID. Wouldn't that be great? Okay, so Pharma Holding Ltd has acquired the patent from Pharma R&D in UK. It's a related entity, a group company. It purchased that IP, it holds it in the DIFC, and then it offers a license to its group entity, a related entity in Egypt to develop it or whatever, to mass produce it, and it earns income from that. Then it is caught by this high risk IP business definition. In order to refute the presumption that they have failed the economic substance test, they would need to provide evidence of its employees in the UAE, that they have the relevant qualifications, what sort of substance they have in the UAE. They need to have a business plan for why they are holding this IP asset in the UAE to basically rebut the presumption that they're doing this in order to avoid tax. Okay, so don't forget high risk IP business, increased substance requirements, deemed economic substance test failure unless you can rebut this presumption. Okay. A few other terms that were clarified by the amended legislation. One is the definition of licensee, which relates to a juridical person. I can never say it right. It's just basically means a legal person incorporated in the UAE or elsewhere. All DIFC entities, apart from general partnerships and limited partnerships, are separate legal entities and would technically fall in that definition. So your companies, your foundations, and your NPIOs and LLPs are within that first category of legal persons. The second one is an unincorporated partnership. These are general partnerships and limited partnerships in the DIFC. Now, basically, that means that all DIFC entities, if they conduct a relevant activity in the UAE, are considered to be licensees and subject to the economic substance test, okay, and the regulations. The definition of of relevant income is defined there, and it basically means any gross income earned from a relevant activity that is recorded on the books and records under applicable accounting standards. Okay, gross income is also defined. It means all income from whatever source, breaks it down, without deducting any costs or expenditure. Okay, now what is it? Gross income does not mean taxable or accounting income or profit. Okay, so just keep that in mind. Both the relevant activity and gross income test doesn't mean that. A connected person is an entity that is part of the same group as the licensee. Group is defined to be two or more entities related through ownership or control, where they are required to prepare consolidated financial statements for financial reporting purposes under applicable accounting standards. So those are key definitions and terms to keep in mind. We'll keep moving. Um, we have also received a lot of questions about the impact of COVID-19 and what this means to firms in terms of having enough meetings in the UAE, and particularly the directed and managed test. The Ministry of Finance has issued a circular on COVID-19. There's a link to it there, but you can also find it on their web page on economic substance. They have specifically said that the impact of COVID-19 will be considered in determining whether the economic substance test was met, particularly in relation to the directed and managed test. I have extracted the most relevant paragraph, but it's a very short circular. Please read it. I've extracted the most important information here for you. So they will take that into account for the period where COVID-19 has affected operations. But please do consider what that means for your entity and what is reasonable in those circumstances and what you can do. But and bear that in mind. But please rest assured that the Ministry of Finance and the FTA will take COVID-19 into consideration. Okay, let's go through the impact of the changes. Now, I've mentioned the roles of the various parties within the economic substance legislation, but basically, licensees are all of you, all the firms anywhere in the UAE. They are subject to the regulations if they conduct a relevant activity. Okay. Your obligations are to submit timely and accurate notifications and reports on the MOF portal with all the supporting documentation to back up your filing, and to respond to any information requests that any of the authorities may direct your way, and to respond to them in a timely manner and accurately. Okay. Regulatory authorities such as the DIFC, DED, whichever free zone, um, are designated as regulatory authorities. Now, in the DIFC, that is the DIFC Register of Companies. That is the designated regulatory authority in the DIFC, regardless of whether the entity is regulated by DFSA or not. For the purposes of economic substance, it is the Registrar of Companies that is the relevant regulatory authority for you. Okay. The regulatory authorities are required to verify the information submitted by licensees in their notifications and their reports, and ensure that exemptions are properly applied. So if you are an exempted licensee, it will be our responsibility as the Registrar of Companies responsibility to ensure that you actually qualify for that exemption as an exempted licensee and provided the relevant supporting documentation. Regulatory authorities are also required to assist the Federal Tax Authority in its role as a national assessing authority. The Federal Tax Authority has quite a large role here as a national assessing authority. They are required to administer the economic substance test and determine whether licensees in the UAE, regardless of which jurisdiction they're established, whether they are meeting the economic substance test, and they will review and assess the economic substance reports that you file. Okay, they will do this on a consistent basis across the whole of the UAE and apply it in all jurisdictions for all licensees. They are also the ones that will issue any penalties or fines for non-compliance. They will hear and decide any appeals and share information with Ministry of Finance where there is any breach of the test or where they need to flag things up to the ministry. The Ministry of Finance is the competent authority. They are the ones responsible for issuing any decisions and implementing economic substance regulations, as well as implementing and enacting the legislation as well. They are developing the economic substance portal for all filings, and they are also the authority that is responsible for exchanging any information, particularly where the economic substance test is not met or where there is high risk IP with foreign competent authorities, the equivalent of Ministry of Finance in other jurisdictions. Okay, so getting to the pointy end, what do you need to do? Okay, so as you know, the general rule is that all economic substance notifications are meant to be filed on the MOF portal within 6 months of the end of the financial year, and all reports must be filed within 12 months. Now, there has been a big delay in launching this portal. So, as a result of that, for any reportable periods covering the 2019 year, um, basically you need to resubmit any notification for financial years ending on or before 30 June 2020 on the MOF portal by 31 December 2020, okay? Even if you're exempt, you still need to file a notification on the MOF portal if you have a financial year ending on or before 30 June 2020. Okay, even if you filed it with us before, you still need to register on the portal and file your notifications by 31 December 2020, okay? If you don't, there are consequences. Now, who needs to file a report by 31 December? If you have a financial year end that ends on 31 December 2019 or before, you are required to file an economic substance report on the MOF portal by 31 December 2020 unless you are exempt. Okay, unless you're an exempted licensee, you are required to file a report on the MOF portal by 31 December if your reportable period ends on or before 31 December 2019. Okay. Now, if you're an exempted licensee, you don't need to file a report. If you don't conduct a relevant activity, you don't need to file a notification or a report, regardless of what your reportable period is. Okay. So this only applies for those that conduct a relevant activity. You need to file a notification. If you only need to file a report if you are not exempt. Okay. As we've said before, DIFC branches with a UAE parent that has a head or head office should not file because the UAE head office is meant to file the notification and reports for itself and branches. The MOF portal is expected to be ready in the first week of December. So, and you can register beforehand. So please go ahead and register as soon as you can. Okay. For the Ministry of Finance portal, there are 3 things you need to take into consideration. Whether you conduct a relevant activity, even if you're exempt, please file a notification. And the deadline for filing it depends on your reportable period. Okay. This is MOF's portal, MOF's legislation, the deadlines, the reporting requirements are all set by them. So we can't change these deadlines, we can't amend it. We are carrying on the obligations imposed on us by the Ministry of Finance, and it's the same regardless of which free zone or which jurisdiction you are registered in the UAE. Everyone has to comply with these requirements. Okay, now let's take you through some of the timelines. So if you are an entity that was established in 2019 or before, and you have a reportable period of 31 December, then the period which you have to demonstrate economic substance is from 1st January 2019 until 31 December 2019. Okay, normally you need to file your notification within 6 months of the end of your financial year end, and most of you would have filed your notification with us by 30 June, which is correct. Now that the MOF system will be up and running and everything needs to be filed on that system, you will need to resubmit your notification on the MOF portal by 31 December 2020, and you need to submit a report on the MOF portal by 31 December as well, because that is within 12 months of the end of your financial year end, which was 31 December. Let's go through another example where you have a slightly different financial year end. So if your financial year end is 31 March, as you can see from this diagram, you do not need to demonstrate substance for any period, any reportable period which commenced before 2019. So for your reportable period from the 1st of April 2018 until 31 March 2019, the economic substance regulations don't apply and you don't need to demonstrate substance during that period. However, from the 1st of April 2019 onwards, you will need to demonstrate economic substance, and the economic substance regulations do apply. Your reportable period, therefore, the relevant one, will be from 1 April 2019 until 31 March 2020. You would have still filed a notification with the DIFC by 30 June 2020. Now, technically, your notification was due on 30 September 2020, which was 6 months after the end of your reportable period. but you are required now to resubmit your notification on the MOF portal by 31 December 2020, and then within 12 months of the end of your financial year, that is by 31st March 2021, you will be required to file your report. I hope that's clear. All right. So what are your next steps in filing on the MOF portal once it is up and running? Basically, based on your reportable period, particularly those that have a 31 December 2019 reportable period, they are required to file both a notification and a report by 31 December 2020, as per that first timeline that we went through. You need to create a account on the MOF portal. Please use this link. You need to submit your economic substance notification on the MOF portal by 31 December. You can find the template notification and guidance on how to fill it out on the MOF portal. There are links in this presentation, but please review them because they will help you file these submissions. And similarly, for the report, you can find the template and the guidance on the MOF portal. You need to only file a report if you're not exempt, and the deadline of 31 December 2020 applies if you have a reportable period ending on or before 31 December 2019. Okay? And you only need to make these filings if you conduct a relevant activity. If you don't conduct a relevant activity, then you don't need to make a filing. The Registrar of Companies and the DIFC have issued notifications or communications to all entities based on the filing that they made with us in June. Based on those filings, if you said you've conducted a relevant activity and depending on your reportable period, we have sent a communication to you to let you know whether, based on your notification filing with the DIFC, whether you need to file a notification or a report on the MOF portal. Okay, so please review that as well. But things may have changed, so you should reassess whether you conduct a relevant activity in line with the amended regulations and the guidance and the new relevant activities guide. So this is what the MOF portal looks like. You need to log in and generate a username and password. Once you log in, you will see a licensee dashboard and a main page, which will include all the submissions that you've made. Please only make one notification and one report per legal entity, not multiple notifications and reports. It's only one per entity. Okay, what happens if you don't meet your requirements? Let's take you through that. So if you don't comply with your requirements, and particularly if you don't meet the deadline of 31 December 2020, if that is applicable to you, then there is a penalty of 20,000 dirhams, which will be issued by the Federal Tax Authority. Okay, if you don't submit a report as well, and you are meant to, then there is an additional penalty of 50,000 dirhams as well. Similarly, if the FTA determines that you have not demonstrated sufficient economic substance in the UAE for the relevant financial year, then there is another penalty of $50,000. 50,000 dirhams. If you fail to meet substance in another consecutive year, for the second consecutive year, that penalty increases to 400,000 dirhams. Okay, and it may result in your commercial license being suspended, withdrawn, or not capable of being renewed. So there are significant consequences if you do not comply. In addition, if you provide inaccurate information, then or incorrect information deliberately, there is also a penalty of 50,000 dirhams that will apply. Where an entity has not met the economic substance test for a financial year, or where you are considered to be a high risk IP entity, then MOF will share information in relation to that entity and their parent entity and ultimate parent entity with the relevant foreign competent authorities. So that is also another consequence of not meeting the test. Okay, now we can finally get to your question and answers. And hopefully we'll be able to give you some answers to your questions as well. Maristella, please go ahead and ask the question.
Thank you, Tanuja. So the first question is, who should file a notification and/or report?
We've covered this many times, but basically it is anyone who conducts a relevant activity is required to file a notification. Even if you're exempt, you're still required to file a notification. However, you're only required to file a report if you are not exempt and you conduct a relevant activity.
Thank you, Tanuja. The second question is, if we have filed notification with DIFC previously, are we supposed to file it again?
Yes, you are required to resubmit notifications on the MOF portal if you conduct a relevant activity. Now, please note that with the DIFC Registrar of Companies required all entities to file notifications regardless of whether they conduct a relevant activity or not. However, on the MOF portal and under the economic substance regulations, you are only required to file a notification or a report if you conduct a relevant activity. So please only file a notification on the MOF portal if you conduct a relevant activity and review the economic substance legislation and the guidance and the relevant activities guide to determine whether you conduct a relevant activity or not.
Thank you. Next question. What is the difference between notification and report?
Okay, so the information that you need to submit as a result of the notification and report are very different. The notification is more about deciding or telling us, the regulatory authority, and the other relevant authorities such as FTA and MOF, whether you conduct a relevant activity and whether you are subject to one of the exemptions. In the report, you need to provide a lot more information about meeting the economic substance test, about what substance you have in the UAE, what income you've earned in the UAE in relation to those relevant activities, and to justify that. So, notification is more about telling us what relevant activity you conduct, whether you've earned income from that relevant activity, and whether you're subject to any exemptions. Because also, you only need to file a report if you conduct a relevant activity, if you earn income from that relevant activity, and you're not exempt. So, if you don't earn any income from the relevant activity, then you don't need to file a report.
Okay, thank you for that. Next question. What could be the documents needed if we apply for exemption on the basis of entities wholly owned by UAE residents?
So the notification and the guidance tells you about what documents will be acceptable and what you need. So have a look at that. You will need to, I'm assuming, provide UAE residence confirmation of the visa, UAE visas, to show that you're a UAE resident or that all the shareholders are UAE residents and UBOs are also UAE residents. And you'll also need to confirm that your operations are only in the UAE. Um, Another thing we've been asked in the past is about financial statements, because you will need to submit those as well. And we've been asked in the past whether they needed to be audited financial statements. There is no requirement for the financial statements to be audited, but financial statements will need to be submitted as part of the reports.
Okay, another question. What are the deadlines and are there any extensions expected for this?
So we have covered this. The deadline, if you have a reportable period ending 31 December 2019 or before, is 31 December 2020 for notifications and reports if you conduct a relevant activity. Now, if you have a reportable period ending 30 June 2020 or before, you have to file a notification on the MOF portal by 31 December 2020. If you had a reportable period ending 31 December 2019 or before, you will also need to file a report on the MOF portal by 31 December 2020. But the normal deadlines are you need to file a notification on the MOF portal within 6 months of the end of your financial year, and you need to file a report on the MOF portal within 12 months of the end of the financial year.
Next question. Is the MOF portal live?
Not yet. It will be live by the first week of December. However, once it is live or once we know a definite date by which it will be live, we will send out communication to all clients using the normal communication channels and through the portal as well.
Okay, for holding company, which has only one or two transactions of connected partner of management service fee, does it fall to service business center category in this case?
Um, the service center business, we can't tell you for sure. Please look at the relevant activities guide. It does include providing administrative or consulting services and other services. So if it falls within those definitions, it would be. It's probably more applicable to managing office than it is holding company. But please look at the relevant activities guide in line with your business to see whether you fall within those definitions.
Okay, thank you for that. Another question. If exemption applied to the DIFC domiciled real estate investment trusts companies, does this exemption cover the underlying SPVs too, even if they are domiciled in other UAE free zones?
So the exemption is for the investment fund vehicle. If it is an investment fund vehicle, then that vehicle is exempt, and any entity through which um, investments are made directly through that investment fund. But please, again, look at the relevant activities guide, and if you're still unsure, please get independent advice. We cannot tell you whether you conduct a relevant activity or whether you are exempt, but you will need to provide supporting documentation in your notification to justify the exemption if you're claiming one.
If we have multiple relevant activities, should we file?
Yes, so if you conduct one or more relevant activity, you need to file a notification and a report, and you need to file information on each of those relevant activities, but you only need to file one notification and one report. You don't file multiple ones for multiple relevant activities. It's entity based. So if one entity conducts 3 out of the 9 relevant activities or all 9 relevant activities, it needs to file one notification and one report in relation to all those activities.
Um, there is an explanation of what banking business is in terms of ESR rule. If a company does not fall under the banking business, can it be a exempted licensee if it is a UA branch of a foreign company?
Yes, so UAE branches of foreign companies are always exempt, regardless of what relevant activity they are, if they're subject to corporate tax outside the jurisdiction. But really, the branch exemption only comes if you conduct a relevant activity. So if you don't fall within the definition of the relevant activity, you're outside of the legislation anyway. You don't need to file a notification and you don't need to file a report. So you don't need to worry about the branch. But you just have to make sure that you really don't fall within that definition. Please look at the relevant activities guide. If you're still unsure, please get independent advice, because otherwise you want to be absolutely sure that you are not subject to one of those relevant activities.
Okay, I think that's it. We've checked all the questions. And thank you so much, Tanuja.
Well, thank you everyone for listening. I'm sorry we've gone a little bit over time. There is a lot of information there. We will provide you with the presentation as well. So you'll have that for your reference. Thank you very much for your attention and for all your questions. And we will be communicating further with you on economic substance. Have a lovely day and have a great weekend. Bye.